Today's jobs report was the story of the week. The economy lost 23,000 jobs in July. The market was actually expecting a gain at 83,000, huge swing there. And on top of that, May and June got revised down another 100,000 plus jobs combined, and that dragged the 12-month average down to just 34,000 jobs a month. The unemployment rate ticked down, but that's only because 264,000 people left the workforce, so they don't get counted, not because more people are getting hired. So over 1 million people have left the labor force since May. And wage growth also came in soft, the weakest number we've seen since 2021. And not really a surprise if have been paying attention earlier in the week. ADP showed a weak jobs number added as well, much lower than expectations. And JOLTS, that's the government's measure of job openings, that showed openings falling too. And healthcare and leisure both softened. And the one bright spot was really productivity, which came in more than double expectations for Q2. Workers are producing more without wage pressure, and that helps inflation expectations a little bit. This is really important because 3 Fed members who voted for a rate hike at the last meeting were using a strong labor market as their reason. So that argument just got a lot weaker. So as a result, odds of a September hike did fall quite a bit after the report came out. Oil and the Strait of Hormuz, that roller coaster continued. Trump did call off a planned strike on Iran early on in the week, and talks of a deal kind of pushed oil prices down and actually helped rates. But by today, Iran and Oman were reportedly working out a passage plan that would exclude, so not include, the United States or Israel, and that's obviously going to set us back again. I'll be watching this over the weekend since that's when a lot is seen to happen. But if the weak jobs trend holds, mortgage rates should see some relief. There are 2 industry notes worth talking about. UW posted a $451 million loss this quarter. That was after a hedge tied to its failed Two Harbors bid backfired. And then they raised over $2 billion in new capital to shore up its balance sheet. And Chase also announced it's going to hire 850 more mortgage advisors, as if we need more of these. But that's part of a $750 billion housing push through 2035. Worth knowing who else is chasing your clients. But next week's going to be inflation news. We're going to get CPI, PPI, and retail sales. All those will come out, plus whatever happens with Iran over the weekend and next week. I'll see you next Friday to share the news.